Happy Independence Day, everybody. I hope everybody had a great long weekend. I definitely did. It was well needed. Most of the time, I have a hard time taking days off. So anytime there's a forced day off, I always get a kick out of the tweet saying, open the markets, we need to trade and stuff. But no, we need these days off. Those are the only days that I can legitimately kick back, relax, and not be anxious as far as, what I could potentially be missing, right? So I always, preach finding your balance and all that kind of stuff, which I try my hardest to do what I can to have the best balance, away from the market. But at the same time, it's still difficult to just say, hey, I'm gonna, take the day off, right? It's very difficult for me to do that. So there are, Friday I actually took off or Thursday rather, I took off for an hour and a half, which was highly unlike me. But that's going to be my goal. If it's a nice, beautiful day outside, and the day has been pretty nice so far, then my goal is going to be to get away from the screen a little bit. But the problem is that as you excel as a trader, as you're getting to each and every next level, as we talk about all the time, it's all about screen time, right? So you don't realize it, but being at the desk, seeing, something do whatever one day, when you're trading it the next day, your mind automatically reverts back to that day. And you say, oh, remember that time that it stuffed at these levels and it failed here and it looked like it was heavy there. And you're absorbing all of this information and you apply it later. And you might not realize that, but you do. And that is the importance of screen time. So my phone is going to keep on making noises if I don't quiet it down. So there we go. And you take all of this information and you apply it later. And that is the importance of screen time. That's why you can't just show up. You can't just show up and start trading. You have to get in the zone. You've got to see it, and you've got to apply that stuff later. And that's the importance of getting, up pre-market, kind of seeing how it reacts. Because then at 9:20, 9:30, 9:40, you can make decisions based on what you saw earlier. Because you're one with the name, you've seen it, maybe you've dabbled in there, you've got a feel for how it's trading, and then you're able to apply that to your bigger trade post-open. So that is really the most difficult part about just saying, hey, I'm taking off and taking a day off. That's why I have a really hard time, because one is the market is insane right now, obviously, and we've said that for years, but this is like on another level. And then two is the information that we gather, whether you see it today or not, you're using it, in the coming days. So that is, my thoughts about days off. I absolutely love forced days off. It's the only way that I genuinely relax, and, don't have to, check my phone, like, what am I missing? What am I missing? So, and that's the same thing with vacations. I do take off time at times, but even my wife knows, that Monday, she just gotta like relax with the, hey, you're on your phone, Nate. I have to kind of detox into vacation. I've got to like slowly get off my phone, and then Tuesday I'm good. Once I'm chilling out, I'm good. And it's just that first day that takes me a long time to ease off the pedal a little bit. So anyway, it was Independence Day, so I think it's proper to talk a little bit about independence and really the beauty of trading. It's 9 to 5. A lot of people have them. There's nothing wrong with them, right? You show up, you get paid, you go home. And the best part about that is you show up, you do your job, and you leave. And you leave it there, right? And, that's it. But you're restricted by what is possible, right? You maybe you get a bonus, maybe you get a raise, things like that, but you don't have the potential of exponential return. And obviously that doesn't come without risk. But that is the beauty of trading. That is the beauty of excelling at something that you love. And just like I always say, somebody always is going to make more. Somebody's also always working harder. So, it really comes down to work ethic, how bad you want it, and really putting your priorities like in the right position, right? It's better to be rich than look rich, right? And a lot of people just want to look, and they want to get the quick money and be able to do a couple little things to appear, like they're keeping up with the Joneses. But that's not what we're doing here. We're trying to create something to be independent for life, right? So it's about how you set it up. It's about how you build that foundation today in order to be able to be independent tomorrow. And I think that some of the best upsides of trading is you don't have any bosses. A lot of people always ask me about managing other people's money and things like that. And look, maybe you could do better, but then you got to look up to somebody. So there's nothing better than just being your own boss. You don't have to look up to anybody. You don't have to answer to anybody. You don't have to say, oh yeah, today was a red day and I screwed up. I did this. That's the worst thing you got to do after you've already been red for the day, right? So you can also set your own schedules. Now, I'm not going to sit here and say that, I just have this beautiful schedule and, I can just take off and do whatever I want, I want to, because I definitely don't do that. I mean, that is the goal if you're not as zoned in and have the work ethic that I do. But that is the beauty of being able to trade. And I know plenty of people that one of the best guys that I know that probably has a pretty good balance is Phil Godecker, right? And Ozark Trades on Twitter. Actually, that was his old handle before Twitter got rid of it. But he'll trade that morning and he will cut it off and he'll go to the lake. And that's what he does in the summer. And he's very, very good at it. And that is something that I inspire to do. But as you guys know, it might be a little bit more difficult for me. And then lastly, like I said, day traders have an uncapped earning potential, right? So you will never master the market. Everybody's got these master course type things and how to master this, how to master that. You're never going to master it. You can get better and better and better and better and find better and better and better ways, but you will never master it. You can work as hard as you want. You will get better, but there is no way to just, I've mastered it. I've done it. There's always going to be another hurdle. There's always going to be something more to learn in trading. And that's the beauty of it, because the second that you think you did master it, it's going to teach you a lesson too. So it's always a very humbling experience. So let me just see if there was anything else that I wanted to discuss. Let's see. Couple basic rules that are going to set you up for success in the long run. Just like I said, the goal is to be rich, not look rich, but live within your means, right? A lot of us get very, very extended very quickly, and there's gonna be those ruts that you go in, even with trading, that you want to make sure that you never have that emotional attachment to your money, right? If you're trading knowing you've got to have that next month's rent and you just lost it, and now your trade becomes, I got to get next month's rent. It's not a trade. And as you progress as a trader, you start to really you're not going to hit a number each day. You're taking the trade. And one of the most popular questions that I got on YouTube was that they wanted to kind of know, how do you know when to be more patient or let the trade work? And that is one of the hardest things. Obviously there's fundamental reasons for some of these things, but there's also a big shift that happens with your trading as you progress and as you find success. And one of those biggest changes is patience, because you go from nailing the trade, taking the money to build your account, to letting the trades work, right? So I don't need to show up and make X anymore. I don't need to show up and try to build my account anymore, right? I am looking for the bigger picture move. let the trade work. It could turn into 2x, 3x, 4x that first move. But whereas it makes sense for somebody learning to take that first move, to build that account, to ensure that you're going to capture that gain, because at the end of the day, it's about giving yourself the best shot, right? So it makes sense for a new trader to keep on taking as much as they can to give themselves the best chance long term. And then once they get to a certain point, and you'll know what that is, that's when you start to let things do the work for you. And maybe sometimes that works out perfectly and it just unwinds all day, and the other guy looks like a chump for covering for a dollar gain when you just made 3 or 4. But it all depends on where you are in your career, because at the same time you might be up $2 a share or 3, and then it starts to rally back and you end up scratching out, whereas that chump before looks better because he took the dollar gain earlier and you overstayed and it rallied. So the point is that over time you're going to change, and over time patience becomes a bigger part, in my opinion anyway, of a trading strategy as you grow and as your account grows and as you find success. So other than that, a couple other notes you guys already know. Don't compare yourself to others. Don't trade with money that you can't lose. Don't take unnecessary risk. There's always these, you don't need to get super aggressive. Most of the time when people size into a loser, if you think about it, you're taking your most extensive risk at the most, the riskiest spot, right? You're sized in at the riskiest spot. That is why it seems so simple, but yet it's so hard. Add into that winner. Add into the winner. You're scaling into something that's working. Most people add. And as it goes higher, not only is your unrealized loss going higher, your size is getting bigger. So your risk is at the highest point ever on a loser. And that's what you've got to really focus on not doing. And a lot of people have a difficult time doing that. That's really it. Just don't have goals that are materialistic. And if you do, then as soon as you get them, you're going to realize it was a waste. It would have been better off in your account. It would have been better off in property, whatever. The goal is to acquire things that are going to create the best memories, right? Because I'm telling you, once you buy that car you wanted, yeah, it's cool, but it's not that cool after a little while. So and then you also, as you progress as a trader and you get better, you actually end up feeling like a tool by dressing a certain way or driving a certain car. So I think that's important. I think that if you realign what your goals in focus is and what success means, I think it's gonna provide better results for you in trading. So let's get ready to scan. There's only a few watches. I mean, we've woken up with woke up anyway with just silly 200%. 100%, 80%, 60%, every single day there's just crazy opportunities. And for me and my style of trade, I want liquidity. I want to be able to size in and size out with, as much size as I want without moving the market with my size, right? So if there's a point where I'm covering something and I'm actually moving the market, then I'm probably outsized for that position. It's just, I'm not interested in that because that means my risk is elevated. That's an unnecessary risk, right? So an example is NIO, N-I-O. And, on a normal day, I might only trade, X. But when there is volume like there has been the last few days, and I think we were 221 million shares on Thursday. And if I do say Friday at any point in this video, I actually mean Thursday. But 220 million shares. So when I might trade X, I could do 3X, 4X, 10X, whatever size I want that I'm comfortable with within reason on a trade like this. And that is something that you need to understand, when you can do that and when you can't. Because when you outsize yourself in a position and you end up moving the market, they start to sense that. And they'll run you just like Sang Lucci talks about on options. Sometimes if he gets on the wrong side of something and he knows that they're just trying to wiggle him out of his position because, there's always somebody bigger. And when they sense there's a player in there that's maybe a little bit outsized that they can just kind of squeeze out, they know. So in a situation like this, it's a great liquid name that you can scale in, scale out without having the risk of illiquidity. So I had a great trade. I started in pre-market on Thursday, and just to kind of dabble, and that is the key word, always. Never size into a loser. Wait for the setup. I always give a particular level where I think the front side, back side move is, and I think that's a great avoid for most traders. However, if you are looking for the a little bit more aggressive approach with the potential of the parabolic move, short the backside, failed fall through momentum, scale in and cover that flush. That was a huge trade on Thursday. Huge. Right off the open, crushed it, and it really set myself up nicely for the day because I had pocketed a whole bunch. And, you go back to it and you might look for the potential pullback, but if you notice on this intraday chart, these 910, 920 levels from early morning end up becoming support. It's up to you to recognize that. Otherwise, you're going to get in trouble being too aggressive, outsized for the position. But at any rate, we got a nice push up to the 970s. Hopefully, we get a 10, 1020, 1050. Maybe even higher. The key here is if you look at INO. INO was a huge move. We all know that. But much like you shouldn't underestimate how high it can go, once it turns, don't underestimate how low it can go, right? So if you had just said, I'm not going to try to find the top of INO, and you just waited for it to pull back that day, and then you just shorted the pops on that pullback day, much easier, no headache. Yeah, maybe you didn't capture that huge trade that we had from 35 down to 24, 25, whatever it was. That's okay. Because then maybe you stayed out of all the unnecessary risk that you had come on the way up. However, in a situation like this, we're going to have that INO day. We're going to have that pullback day, and then everybody's going to underestimate how high or how low it can unwind. So that's what I want to remember. That's what I want to be patient on. We're going to exhaust ourselves if we keep on trying to find the top. So for me, NEO, gap up, parabolic, reactive trade. Don't try to be figuring it out when it's going to pull back, when it's going to have that pullback day. Take advantage of these big share flush outs. Move on. Same thing. Monday morning, maybe a gap up, parabolic, flushes out, move on. And then let it pull back, let it fail, let it do its thing. And that day that it starts to have failed follow through, lower highs, under VWAP, can't rebound, that's the day to be patient. That's the day to let the trade work for you rather than you trying to figure it out. So for now, gap up, parabolics for me, front side of the move. And don't underestimate what it can do. Don't size into a loser. And the only size that I put on is after some type of parabolic exhaustion candle or some type of failed follow through momentum under key support. So that's going to be a watch for me. WKHS is literally the same thing as INO, literally. And almost, not necessarily the same price, but same move, same action, same, how is this thing staying up so well? So as I tweeted on maybe Tuesday, something like that, maybe Monday, they bought themselves 2 weeks of a solid market, right? Because the CEO is talking about UPS contract, this and that, and maybe they win the government, whatever it's called, the bid or whatever. Uh, and he put on a great show, and pretty much was that is the bull thesis. So if they don't get that, and it ends up being just a whole bunch of show, then obviously we're coming in hard. And obviously don't underestimate the unwind day, just like I&O. But for right now, you need to realize that there is a reason for these people to hold. There is a catalyst coming. And so we'll see what happens with that. But same thing here. There's plenty of trades in this on Thursday, and really nice opportunities. If you look at the big picture, nice parabolic type moves, and then flushed out. And if you looked left, you knew the key levels. We went over them in the room, and I was trading this short, but each time that it flushed out, I reminded people what the key levels were. And sometimes that was 2050, sometimes that was the 21 level. But the key is, don't try to be a hero and figure out what day is the day that it's going to pull back huge. All you do on front side of the move, NEO, WKHS, I&O, is you take those big moves and you move on. When you get in trouble is when you try to scale and anticipate the backside. That's when I get in trouble. That's when a lot of people get in trouble. And that's why these things hold up a lot longer than you think. So the more I verbalize it, the better it is for me, because when I'm looking at this on Monday, I'm going to be like, you just told people on the video not to do that, and here you are thinking about doing it. So these videos are good for me. Same thing with the broadcast that I do in the morning. Every morning, 8:50 a.m., I grab the microphone and discuss my trade plan. Verbalizing your trade plans will help you. And you could even just talk to yourself and in front of your screens, verbalize it. And then when it comes time to do the right thing, you're going to remember that you just told yourself you shouldn't be doing that, and wait. So biggest piece of advice on these types of trades is you have the opportunity to trade these in size because of the volume, but you have to trade them. Don't look for the big move. Wait. Trade them, scalp them, take advantage of the action, because if you think about it, everybody's bent from teens, 14, 15, 16, 17, right? 18. So if it starts to flush out, they're not covering. They're waiting. They want to get break even. So your edge is to cover, because you can take that scalp all day long because there's no competition, because they're all waiting for lower. And then when it starts to go, occasionally a couple people freak out, they cover. That's why they stay up so well. So I&O, perfect on Wednesday, after hours, flushed out. And I had taken a small position, and my goal was weak open flush on Thursday, and hopefully a ramp to 22. And we got 22, something like 22 and 30s, 2240s, 2240s. And so you guys saw the trade. I posted it. I got long. Key levels, 2040 was the key. That was the top on Wednesday. Came through, failed, came through, up a little bit, failed again, fade. Remember that. I'm talking about screen time. Remember that it had trouble at 2040s. So the next day comes into 2040s, has trouble. 2040s, has trouble. So I like to sell into that resistance. I can always re-add as it proves otherwise. Starts to base over 2050s, 21s, whatever. And I did. I ended up adding more back. I'd rather be adding higher, just like you do with adding to a winner. Same concept. Rather than adding too much, without that confirmation, and then bailing, and then it ends up going. So I do actually think this can hang on a little bit longer. And I do think that we can maybe retest towards the 22s, 23s. I think that there's just a lot of shorts in this. But let's see. There's a lot of news and headlines in the vaccine kind of space. So Kramer did say on Thursday after hours he was selling, and he already has once, but that he didn't like INO, he didn't like NVAC. So who knows? Maybe we have a week open again. But I'm just looking to react to that action, looking to take advantage of any week open that sets up for a breakout, sell into the rip, and then look for key levels under 2040s. Could potentially be a nice unwind spot. And I should probably hit WKHS again, just as far as a trade idea for tomorrow. The key is going to be not to underestimate what it can do, but you can see key level right here. We've got a huge base at 20, right? So we know that 20 is a big level. So any big gap ups towards 21, I would be using probably 2150. Just draw a line across. You can kind of see that there's going to be an issue at these levels potentially. So I feel like any big gap up could fade off towards 20. Otherwise, 20 over and under, and look for the unwind. But again, don't underestimate the unwind when it starts to come and when it starts to happen, but don't try to find it. Don't try to force it. Otherwise, you're going to get chopped up. You're going to overstay. And most importantly, you're going to pre-exhaust yourself and miss the entire move because you're going to say, forget it. I'm done. This one's too tough. And then the move happens. So other than that, plug and BLDP, I watch the same. BLDP actually was up high 18s, mid 18s after hours. But let's see what happens. These are both ones that I think could go 10-20% more, but I want to stay focused on them because just like NEO, I'm not suggesting that these things are trash and they're going to unwind. But there is a big trade coming on all three. NEO, plug, BLDP. They've been straight up. Nothing goes straight up. And when they do, the correction is fierce. And that's why, I like them. That's where the edge is for me. And the most important part is to cover into that big correction. So no rush for me. Staying familiar, setting price alerts. But I think we have three big trades coming. NEO, BLDP, plug. So, failed follow-through momentum. So again, like I always say, if you go to the description, click the link, it goes to my website, and I'll have all the descriptions for the trades as well, just in case you wanted to review that. But most importantly, GNUS. This one, they did the same thing that we've seen on IZEA as well as a few other names where they kind of kick the can down the road, right? They know that it's a very highly active, super tradable name right now, and it's got a huge shareholder base. When there's a huge shareholder base, it's very easy to get people excited. You've got the ones that are never going to sell. You've got the shorts who know the truth of where it's headed. But in this market, it's just, it's just not on the shorts timetable. So they're talking about a forward-looking event and an announcement on Monday, and I think it was like 10 a.m. or something. So let's see what happens. Everybody's going to be waiting for the same thing. So, a situation like this, I would say this is the most crowded short potential that's out there. So I would rather let shorts try to find the top, squeeze them out, and then once it starts to fail, I'll start looking. And that's my plan with it. Otherwise, I'd probably just avoid it. But I do think they're setting everybody up for, nothing. The filings are just so bad but they know what they're doing. So they're pros at this game, and so ideally 420. So it closed in the 360s, and it peaked out around 390s, 395. So I could see this 420s, maybe even a parabolic to 450. That would be ideal, and then end up coming all the way back. That's what I'd be looking for. Good volume, on Friday we had, or Thursday, 285 million shares. That's a lot. So there's a huge momentum presence, and don't underestimate it. Understand that this is going to be a super crowded trade. Everybody wants the same thing. It has options. And so for me, let it blow off, let it trap, blow off, and then I'm interested. Fran was big. Fran was great on Thursday. Newsletter was buy, which, I absolutely love because they just bury all these chasers on the long side, and you get that free look. You get to see all these people chasing buy, 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 buy. It's not moving, it's not moving, it's not moving. And then the newsletter tries to, force the breakout with their flow, and then they load even more people into the breakout, and then you get that nice unwind. So, I dabbled a little bit here and there, but no size until open, right? And I waited for that exhaustion move, waited for the free look by the newsletter, and I was pretty much patient all day. I made it to about 580s though, 580s, 550s. So in a situation like this, I always pray for higher. So 520s, 550s, some type of push back up to potentially this level right over here. And it tried to base here, tried to rebound. So I feel like everybody that rebounded here for a end of day curl bailed. So then it forces it down. So I think we could come right back up to that level. And if they find resistance again, I'm looking to get short. Solo, I have this under failed follow through momentum just because I'm going to be waiting for that. Same thing with FUV. So these are all on a rocket because WKHS and NEO and all these. I mean, just the entire EV sector is going nuts. So I have them under failed follow through instead of continuation just because I'm not going to try to find the top. The only reason I would short them is if they go parabolic. Otherwise, I'm going to wait for them to exhaust everybody out, and I will pick up the pieces after. It works very well in this market. Same thing with MYOS. That was my plan. I traded it Wednesday as well, which ended up being great. But it could exhaust a lot of people out. So the next day, look left, and that was the goal on the broadcast at 8:50 a.m. I said I'm mentioning it once. It's a quiet trade for me because the more crowded it gets, the less likely it's going to work, but I am going to be shorting into pops. And so I shorted into all these pops and the open, and then I just quietly covered through the day. So that is the point here with FUV and solo. It doesn't have to be that first day, but I want to keep it on watch after they start to fade. Once they fade off, I'm going to be interested. Last but not least on the failed follow through is Job. Job was great. I respected the trend though. So I had a couple good, entries, and it flushed out, started to kind of go, but I was outsized for the potential of, the circuit halts that I warned about. So there was a couple times where I kind of scaled into full size and then scaled back out. And because of that, I kept my emotions at a minimum, and I was able to take advantage of the, entire fade, minus the late day fade just because I left the desk. But overall, fantastic. In a situation like this, I think that it's got enough of a shareholder base that people will get kind of excited about it. Maybe it gaps up to 150, but I'm looking to fade it versus those, 165, 170 level. No business up here. It just caught some momentum, had some good volume. Good chance that it gaps down. If it does, I might still be interested, but in a perfect world, it gaps up 150, 160, 170. And then forces a couple shorts out, and then we get a nice fade. Continuation ideas, IDXG, nice one. That thing went nuts after hours. I sold some into the rip. I had bought over here, ended up coming back down, but I just felt like it was ready to go. The daily chart had my interest early. The volume compared to the prior days, the base, the fact that they probably flushed everybody out the prior days. So as I said in the room, I was thinking that it might have a late day shove. So I left it on, and then all of a sudden after hours, they turned the jets on. So I went ahead and sold some just because, it was up $1 or more, $1.50 or something. And so at any rate, I still have some. But I would be looking and if I was going to get aggressive with this thing, then I'd want to see 720s base. I don't want to be buying 680s, 660s, 650s and anticipating that it's going to go. I'd rather be buying higher after it proves that it wants to go. ASTC, same thing. We talked about this one before. This thing's just a PR away. I want to stay focused on it. I do have a small position on it, but you know, they've obviously been holding it for quite some time. Whether or not that means anything, you know, who knows? But clearly, 350s, 330s, 350s are the key. But like I said, we're one PR away from, you know, blasting it if they wanted to. So I've just been staying steady with it. I have a lot of price alerts set just so, you know, I've done the work. I've done, you know, I've been watching it. The last couple days there was a buyer in there, but you know, that doesn't mean anything. So I'd rather be scaling into a winner, scaling into something that's over 330, 350s. But again, in my opinion, you know, in this market, one PR away from something crazy. SHLL, this one can continue for sure, but I'm going to be monitoring it for either, you know, a gap up versus these 28 levels and fade, or if it starts to just base and go again, don't underestimate this stuff. These SPACs are pretty crazy lately, and you know, I'm just keeping it on watch. I don't have a super game plan for it. Same thing with WRTC. You guys saw I posted that you know, a couple weeks ago. All these wicks that we talk about, and I said it felt to me like INO and WKHS, right? The early stages of it. Something that, you know, it should have pulled back ages ago. They did the offering. Nobody cared. Kept on going. They priced it well. And, you know, I could see this thing going 15, 20 and me asking myself why I didn't just, you know, absorb it and hold it. But nothing that I'm looking to step in front of, potentially join the trend, but nothing to chase. Idea was last week in the 9s, but you know, we talk about these wicks all the time on this video, so check those out and let's see what happens with that. BYFC, I guess there's some more, forget what it's called, let me look. Let's see, Eric was telling me about it. It is called Tuesday is Blackout Tuesday. So it's possible that the black-owned banks get ran again. And if that is the case, then, you know, we watch BYFC and all the other ones that ran with it. So it's something to be aware of. It worked last time. They went all nuts. And I guess, you know, with that said, it's worth keeping an eye. PHCF with that. I mean, these things have been crazy. And I think Carve went. So, you know, I probably won't trade Carve. That liquidity is a little too low for me. BYFC liquidity was pretty good. PHCF is it's a little difficult. I had a great trade there. I still have a position on that one. But, you know, it's something where you either buy when nobody wants it and sell when everybody wants it, or totally avoid it. Because it's easy to get chopped up in that thing. And then last but not least, I've got a couple, as I always say, I have staying familiar section. So we've got a lot of good trades off of the staying familiar section. Basically what that is all these charts that I want to see, I want to be prepared for. You know, something like DOCU or SHOP or, you know, anything that's just gone straight up, no correction. That's what I'm interested in. And then I'll set price alerts to the upside and to the downside so that when and if they do hit, I'm prepared. I've seen the chart. I know I want to be part of it. But other than that, we've got, you know, recent IPOs. API is worth kind of keeping an eye on. Graph was a recent SPAC, which is, I mean, just look at the range. I mean, 11 all the way up to 24s, or 23s rather. Crazy. And LMND, had a small trade on this one Thursday. And traded the parabolic move, covered the flush, and it held pretty well, and it went over 70. So, you know, are we going 75, 80, or are we opening at 68 and we're flushing to 65, 62? There'll be a trade there. Not for everybody, but I think that there's going to be a good opportunity there. I think that the ACCD will be an opportunity. Any pops versus 32. Looks like it opened a little too, you know, people got a little excited on it, 22 pricing. And anytime that they open up as this strong and fade off, a lot of times you see it unwind. So I'd love to be part of that unwind back towards, mid or low 20s. But with that said, as soon as they start rebounding, take it from API, right? So if they stop going down, and if you look back a couple days, it's had a great short. But then if it starts to hold trend, get out of the way. Don't be that guy trying to find the top. So anyway, like I said, click the link in the description, and you can view the rest of the scan, the thoughts, all that good stuff. And then we had one person because we got 597 likes, which is not 650. And where was the one that I had? Chris Frago, you got that the t-shirt today, as well as I did have another note. Anybody and everybody that took part in the Avidity Fitness Challenge. Let me see if Zach gave me the final number. 6 people. So I was donating up to 10,000 on as many people, $250 per person, and we got 6 people. We had 22 or 24 people start. They did a couple. All you had to do was 4 in a row, and only 6 people did it. So that's kind of disappointing. So that is $1,500 to Traders for a Cause, but there was 10,000 for the taking. And so with that said, if you guys have any interest in working out, getting yourself motivated, having somebody keep you accountable, we do it every Saturday, Sunday, and Tuesday and Thursday. I'd love to have you guys part of it. All you have to do is DM Avidity Fitness on Twitter. You can email me as well, webmaster@investorsunderground.com. But I'd love to see you guys try it. There's a lot of people that need to be motivated to do it. I thought we could do a lot better than we did, but a little disappointing that only 6 made it through. Thank you guys for trying, but all you had to do is show up to 4, and $250 goes to Traders for Cause. So anyway, with that said, Chris Frago, like I said, email me, webmaster@investorsunderground.com. If you guys have any questions at all for Investors Underground, let me know. You can email cam@investorsunderground.com. Big Independence Day sale going on, 4th of July. So if you're looking to get involved, now is the time to get involved. And that's it, guys. Have a great weekend, and we'll see you in the room on Monday.